Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 29th day of June, 2017, and this is the Daily Report for Gold and Silver. We do have moderate downside pressure in the precious metals markets, with gold, silver, platinum, and palladium all trading moderately lower on the day. Gold closing off by about $3.50. That is basis the most active August futures contract, closing at $1245.60. That's a net change of about 0.3%. The high on the day has been $53.20, and the low on the day has been $39.70. So we have seen some downside pressure, closing at about midway through today's trading range. Gold traded down, as I said, about 1/3%, but silver really got hit hard today, losing almost a full percentage in value, closing at $16.56.5. High on the day was 86, and the low on the day was 55.5. So as you can see, in the case of silver, it closed just off of the low achieved today. So traders, as we have looked at over the last couple of days, the first chart that I am pulling up is the dollar index, once again under tremendous pressure, giving up another 0.4, almost 0.5% in value today, about the same yesterday. And then of course, on Tuesday of this week, we saw a real meltdown. At this point, we have seen roughly a 2% decline in value of the dollar index. Now, typically, that would be extremely supportive of gold, and in fact, it was in this case. However, selling really in the gold market itself was more than a weak dollar could compensate for, at least for today. Of course, over the last couple of days, we saw small rises in the market, but those rises, once again, were a direct reflection of a weaker dollar and not buying in the market. In terms of the dollar index, there's two key areas that we definitely want to look at. The first key area is going to come in right at around 95. That's a technical point. And then 94. Those are the areas, if we do see the dollar continuing to track lower, that's the point I would look at for potential support, either 94 or 95. Now, one thing that I have been truly amazed by in terms of the actual trading range that we have seen recently in gold is that when we consider the 250-day moving average, our shorter term 50-day moving average in white up here, our longer term 200-day moving average here, they have absolutely defined the trading range recently in gold ever since it broke below the 50-day moving average a couple of weeks ago. And then the other thing that we're noticing is that the market's characteristic is absolutely that of a consolidating market, trading sideways. But when we look at the weekly chart, it's obvious that what we're looking at is lower pricing on the week. Nonetheless, we have managed to see this market hold above our protective stop, which sits below 1235, of course, and we have seen this market trade within a defined range, closing very, very close to the previous close as exhibited by these candles. And that, of course, is ever since we saw this dramatic fall that occurred on Monday by a single tremendously large order of 1.8 million ounces. Now, we are now coming to the conclusion of the week. I would expect some stability throughout the remainder of the week, and then going into the holiday weekend, I do expect the markets to be quiet unless there is some geopolitical or political event that kind of shakes things up. In other markets that we follow, there was a cascading of lower pricing today in U.S. equities, and the dollar continued to really fall, now breaking below 96, closing at 95.32, a loss of about 0.4%. Over to equities, triple-digit meltdown in the Dow Jones Industrial Average, closing off by about 167 points, closing at 21,287. Standard & Poor's also losing almost 0.9%, closing off 21 points at 2419. And then lastly, the NASDAQ, which had the greatest percentage drawdown today, closed down almost a full 1.5% lower at 6145. And traders, as I said in my opening letter today, about the only thing that we have seen moving up recently is interest rates. You can kind of add oil to the mix, but we had a tremendous sell-off in U.S. equities today. Dow Jones Industrial Average losing about 0.8%. In terms of a straight candlestick pattern, we can absolutely identify an engulfing bearish, and it is an engulfing bearish that is occurring after a defined uptrend in the market. And then on top of that, we had a little bit of sideways activity leading up to today's price decline. But as you can see, it opened above recent activity throughout the week, and it closed below recent activity to a new low on the week. Now, obviously, the same can be said for the Standard & Poor's. Let's go ahead and pull that up. And we also get an engulfing bearish after trading sideways for the better part of the last couple of weeks, really since the beginning of June, when we consider the fact that, let's draw our line here, that since the beginning of June, we can see that the market, aside from a couple of clips right in here, has been defined, at least with the S&P, having a high of 2440 and a low of about 2419. We can certainly see that we closed at the lower end of that scale today, but we've done that the other day, and the question is, will we see continuity or a continuation of falling prices? Right now, there is a lot of uncertainty as to whether or not this current administration is going to be able to deliver on its promises of tax cuts, regulatory revamping, infrastructure projects, and the health care bill, which has really put everything else in limbo. And then traders, lastly, do want to take a look at the NASDAQ Composite Index, this through the eyes of a daily chart. And the one analogy, or the one thing that I can say about the NASDAQ, is on the way up, this particular index absolutely outperformed both the Standard & Poor's as well as the Dow Jones Industrial Average in terms of percentage gain. On the way down, we can absolutely say that it has had a greater drawdown in terms of percentages than we have seen in both the S&P as well as the Dow Jones Industrial Average. Much like the way silver reacts and silver trades when we compare it to gold. Traders, in essence, we have seen gold prices trade dramatically lower ever since the failure to take out 1,300 a couple of weeks ago. After we saw a pretty nice substantial rise and what I believed was a recovery in the market, Monday really changed that on its head as we saw a single trade really flip this market back into a bearish sentiment. And then we had that followed by 2 days of modestly rising prices. And the modestly rising prices were definitely a direct reflection of dollar weakness as opposed to buying in the precious metals markets. And I was a little alarmed by that, and that's one of the rationale for bringing that up over the last couple of days. But what I can say is that given all of the downside bearish pressure and sentiment being placed on precious metals, specifically gold, I think that this narrowly defined range that we're seeing gold prices kind of stay in is definitely showing me that there is some underlying support for the precious yellow metal. And I believe that recent lows should in fact hold. Maintain your current long position as well as your current stop. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. One side note that I do want to say, we will be moving our offices over the long 4th of July weekend. So after Friday's show, we will monitor the markets, but there won't be any other show that comes until Wednesday of next week. Bye-bye.